All right, I think we can get going. Again, hello everyone and welcome to our webinar, which we have called The Finance We Need for the Futures We Want, the Role of National Development Banks. My name is Gaia Larson. I am the Director for Climate Finance and Access and Deployment within WRI's Sustainable Finance Center. At the center, we seek to help ensure that public and private finance is aligned with the Paris Agreement's goals, and we do that through a variety of different activities, including knowledge products like our 2018 flagship report on MDBs and the Paris Agreement. And this year we'll be publishing a variety of other documents, which hopefully will be of interest, including on financial intermediary lending and Paris alignment, the impact of COVID on the ability of developing countries to pay for climate action and more. This event promises to be a very interesting discussion on the role of national public development banks and the role that they can play in financing a just and resilient transition. And the journey will begin and be led by Manish Bapna, who is our very own interim president and CEO of WRI. And for those of you that may be a little less familiar with WRI, we are a global research organization that works to address the urgent need of the urgent sustainability challenges related to food, forest, water, climate, energy, cities, and the ocean. Now, Manish has had a long time interest in development banks. Before coming to WRI in 2007, he was the executive director of the Bank Information Center, which is an NGO that looks critically at the MDBs and their role in the world. But earlier in his career, he also worked at the World Bank as a senior economist and task team leader. And he will begin with an interview of Rémy Rioux, who we are very happy to have on this conversation today. Rémy is an expert in economics and international financial institutions. He has held a variety of important positions in his career. He has been the chief of staff of the French economy and finance minister, deputy secretary general of the Ministry of Foreign Affairs and International Development, and very importantly, he coordinated the finance agenda for the Paris Agreement. Mr. Rioux has been heading AFD since 2016, and AFD is one of the first development cooperation actors to have committed to aligning 100% of their finance with the Paris Agreement goals. And they take that commitment seriously. It's not just a words on the paper. Rémy has been since 2017 a chairperson of the International Development Finance Club, or IDFC, which is a leading group of 26 national and regional development banks from all over the world. And WRI and AFD have been partners for over a decade, working together on various topics related to international climate finance and low carbon and resilient development. We will then be thrilled to invite Franny Leautier into the conversation. Franny is currently a partner and CEO at Southbridge Investments, which provides financial solutions and advisory services to private and public clients in Africa. But before then, Franny has also had several senior leadership roles, including at the World Bank, where she was chief of staff to the president and vice president. She's also been a senior vice president at the African Development Bank. And very importantly to this conversation, she was a COO for the Trade and Development Bank, which is a regional development bank in Eastern and Southern Africa. So after this conversation, we'll have around 15 to 20 minutes for discussion and question and answers. So please do enter your questions into the Q&A box. Even if your question doesn't pop up, it doesn't mean that we haven't, to you to see, it doesn't mean we haven't received it. We will be monitoring and looking for those questions, so please do send them in. And there will be a recording of the event in case you have to leave early or some of your colleagues are not here. We will send that out to everyone who is registered. So without further ado, Manish, hand it over to you.
Great, thank you. Thank you, Gaia. Very warm welcome, and really what a privilege it is to have both Rémy and Franny with us today to talk about this incredibly important set of issues. Rémy, I wanted to invite you first. I have a number of questions that we would love to hear from you. But before we do, just want to let people know on the audience, we have a really global audience. We have about a third of the people in the United States, but we have an incredible representation from Europe, another 10% from Canada and Mexico, a lot of people from India and Brazil, many countries around the world. So this is just a great opportunity for us to broach these issues with a truly global audience. Rémy, last week was another important week on climate and sustainable development issues. The US NDC dropped, the Leaders Summit dropped. Before we jump into the development banks more specifically, I'd love to just hear your take on what you see as some of the main takeaways, some of the main highlights from the Leaders Summit last week. You're on mute then.
Here I am. Hello, everybody. And thanks a lot, Manish, Gaia, all WRI colleagues for the introduction and this conversation. AFD, I'm heading, is a partner of WRI for, I don't know, yes, about 20 years. We worked a lot on sustainable finance, also on access for local institutions to international funds, especially the Green Climate Fund. And so I'm very happy to join and very pleased also to discuss and to listen to Franny with her vast experience of public banks and private finance. That will be extremely helpful. My take on the Leaders Summit on Climate last week goes twofold. First, of course, very good news. We start again, we're back in high tides of climate diplomacy, which is fantastic, and fantastic to have US and all colleagues back from COP21 and demonstrating their traction on other countries. So somehow President Biden and his team managed to create a safe place to discuss climate, and we've seen other leaders joining, especially President Xi, President Putin, and in the current geopolitical situation, this is not a small feat. And very happy also, I'm in Paris here, to see Europe coming strong in the discussion, being the most ambitious for now region in the world, and the UK presidency also extremely active. So strong start on the way to Glasgow, which gives us a lot of optimism for the final result. Maybe three caveats, nuances,
yes, please.
as probably work to be complemented by Glasgow. First, I heard more about mitigation than adaptation. So I understand the narrative. The narrative was more about the transition is possible. There's a huge potential for job creation in it, and that's true, and that's very important. But we all know, especially in this room, that we will also have to adapt to the consequences of global warming. So maybe we will have over time to rebalance the narrative this year. The second point is I found, but also for good reasons, that the summit was more bilateral probably than multilateral. And so it's maybe something we have to work on, and the crisis of multilateralism is probably not fully behind us. And an invitation we will explore probably in the coming questions to invent, I call it polylateralism, a broader scheme with multilateral institutions leading. Of course, UNSG was there, the World Bank was there, but with the capacity to embark way more actors than what was the case previously. And last, I heard more about private finance than public finance. And on this as well, we will have to rebalance carbon pricing, of course, but also the way we will satisfy the 100 billion pledge, and also how to mix public and private finance. But it looks good. It looks like 2015, actually, somehow. At the moment we are talking in the year, and it gives the momentum for the UK presidency and their Italian partners to work on it in the coming months.
Yeah, Rémy, that was really insightful. And those 3 points around a need for a greater focus on adaptation, a need to think a little bit more multilaterally, a need to focus on public finance, not private finance, is actually a great segue into the question I was about to ask you, which is the Finance in Common Summit. Not everyone on this call may know what the Finance in Common Summit is, but you actually did something crazy. You brought together 450 public development banks around the world for the first time in November 2020. So this is about public finance. This is about multilateralism. This is about adaptation as well as mitigation. And I'd love to, hear a little bit more. Tell us a little bit more about what this Finance in Common Summit is. You see the sticker or the little poster behind you. Why did you organize it? What did it achieve? And what comes next?
Actually, there was a very important announcement last Thursday regarding public finance. We are very honored that Prime Minister Mario Draghi decided and announced that Italy will host next autumn the second edition of the Finance in Common Summit, as we promised last November. And more important, he explicitly said that it is now part of the G20 presidency agenda, which was something we couldn't achieve last year for the Saudi presidency. Another connection has arrived, and that's extremely precious for all of us. The Finance in Common Summit, yes, was the idea was very simple. I'm chairing the IDFC. I know very well, like Franny, multilateral development banks. So IDFC is more about regional and national and subnational public development banks. And from this position, I have, for the last 3 years, colleagues asked me to gather the whole family and see what we could provide. Somehow this is the 2015 message deploying progressively. I mean, Paris, of course, but also the SDGs, and especially what SDG 17 concretely means, and how could we give its full magnitude to the ambition and the message sent five years ago, meaning this invitation to question our models, to transform our societies, and also to see finance as an end in itself. Remember, this is what we phrased Article 2.1c of the Paris Agreement. So we had this this invitation to go beyond the traditional lines, international, national, north, south, what we call a world in common at AFD. This is now our motto that is progressively taking new forms. So IDFC is one of these forms, and finance in common is an even broader one. So the finance in common, first of all, was an attempt, successful attempt, I think, to identify this group of institutions, meaning institutions that are publicly owned, that have their own autonomy, of course, and they have a balance sheet, and they have, that's what distinguishes them from commercial banks owned by the public. They have a development mandate. I mean, they are aligning with Paris and SDGs. And this helped identify, yes, 450 institutions. You can find on the website the academic, the research program called The Visible Hand, that helped us set the database. So you have all the details on these 450 institutions, and also clarify their bridging role in our societies, meaning institutions that are, between short-term and long-term. They are counter-cyclical. We see it very strongly in the COVID-19 crisis, but they are also thinking long-term and thinking about the just transition on a daily basis. They are between public and private, of course, able to create markets to de-risk the private sector and to incentivize it. They are, of course, more and more between the global and the local level. When you consider these hundreds of institutions as a full-fledged architecture with its various layers, from the multilateral development banks at the top of the pyramid, and then the other institutions, able, of course, to provide the first mile and the last mile. That's often the financial sectors, especially in developing countries, are not able to provide. So we identified all this. This is at your disposal. Hopefully, having the center of gravity of all this public financial system getting closer to the ground, where quality projects have to be originated way more than what we are doing today. And you know the figures. It means $2.3 trillion investments a year when you add the financial capacity of the 450 PDBs, and 2.3 trillion. It's about 10% of all investments, public and private, each year. So it means the Paris Agreement and the SDGs, they have a financial capacity that can follow directly this mandate of 10% of global investment. And this is the existing capacity. It's not something out of the blue. I mean, this is already what we are more and more doing if properly incentivized. So that was about the research conference. And the second dimension of the summit was this joint declaration we all subscribed through our associations and the various coalitions that were launched at that time. And really the surprise for me and the beauty of it was how consensual we were in the discussion and all year long preparing for the summit. So in this world that looks like fracturing itself, you have here a group of CEOs, you have a group of institutions, you have thousands of colleagues that are advocates of sustainable finance and willing to do way more than today. So please have a look at the 9 pages of declaration. And that is rather ambitious. Now we have to, of course, we have to do it, but it came somehow as a surprise, and I hope the signal was perceived somehow. And I close by it. I think this voice, the voice of Public Development Bank, was missing because the governments, I mean, of course, they have their global representation. You have the UN, you have the G20, you have the governors of the various institutions. The central banks, they have their global voice. They have the BIS, they have now NGFS for climate. I mean, and we know that is what is happening here. Civil society, you have forums, you have Climate Action Network, you have a say on the global stage. And somehow the private finance, private sector as well, and public banks, this world was too fragmented. And I hope now that, again, with the World Bank Group, with MDBs leading, because they are around the table of this multilateral discussion, the whole group will be represented and mobilized, of course, to contribute to find sustainable and global solutions to the crisis wherein we hope to make progress by October, by the next summit again in Rome. We decided to focus on we made it very large last year, so now we will focus on a specific issue, which is food security, agrobusiness, meaning biodiversity preservation, adaptation to climate change, this nexus of issues that hopefully will reverberate highly in the various summits that will happen second semester, but also we will take stock of where we stand in this coalition, and more broadly speaking, in the movement we've launched last year.
Rémy, that was, it reminds me of that Einstein quote you probably have heard: only those who attempt the absurd can achieve the impossible. And the fact that you brought 450 banks together, $2.3 trillion a year, to really think about how to align their lending, their investments in ways that were consistent with the Paris Agreement, the SDGs, was remarkable. For those who haven't had a chance, I believe, correct me if I'm wrong, that the website is financeincommon.org. You could see the declaration, you could see the database that you pulled together. It's really an incredibly rich repository of information that we all need to understand if we're really going to finance the Paris Agreement, the SDGs. And it's great to hear that Italy is going to be hosting the sequel, Finance in Common 2, this fall. So that's all incredibly exciting. I wanted to bring in Franny, that's okay now. A number of questions I'd like to ask her and both of you. And then we're going to get to all of you in the audience and get some of your questions momentarily. But Franny, it'd be great. Also, it's a kind of, where are we in this journey? Last week was a big week, with the Leaders Summit. It'd be great. You're as Gaia mentioned, tremendous experience within the World Bank, but a lot of experience with public and private development banking in Africa. From an African perspective, from your perspective, how did you see the summit? What were the highlights? Were there some lowlights?
Well, thank you very much, Manish, for having me on this conversation. It's a real pleasure to see Rémy once again. I think the last time I saw you, Rémy, is when you still had that dream of preparing this big event with hundreds of national development banks. So it's very good to see that dream has come to a realization. And as Manish has said, has developed not only beyond what was impossible, but to now look at steps that could be taken that could actually deliver tremendous results. So congratulations on that. I'm also happy to be here as a member of the advisory board of WRI and to support the work that WRI is doing in sustainability around the world and particularly in Africa. On the summit, the Leaders Summit, I was struck because we are watching it through video. I mean, I wasn't physically there, so you can see a lot about people and the and what they are intending to say by watching the tone and other things that you may not look at when you are actually in a physical meeting. So I was struck that every of the leaders who spoke about urgency, and you could see it in the tone of their voice, that this is really something that they are considering as very urgent. And so my question then was to link that sense of urgency and the tone of urgency to then how would it play out in changing day-to-day behavior. And I think a lot of the things that we were talking about here today in this panel are helping move the needle then in that direction of great, now how do we do it conversation. The second thing that struck me is a lot of the announcements that were made had a direction. So there was more speed, or the promised results were being ramped up. So I think this was also quite important because urgency and speed go hand in hand, but ramping up the pace of achieving results was also something that I heard in almost all the remarks made by the leaders. And then the last one was something that I was struck by, because it's true we are all working towards this common goal and we have a common project to stay beneath the 1.5 degrees and to do the best that we can to reduce carbon. What was really striking is that everyone who spoke came up with something that was unique to their country, a unique innovation or a unique way of going about it. And to me, this also struck a tone in me that means the chance for discovery and learning is very high, because everybody is trying something different, and one of the countries or one of the companies is going to crack it, and then the rest of us can learn and scale it up. So those were the positive things that I heard. Of course, there's a lot left to be done. We still have to understand concretely, what does it mean to build back better? How do we change financing and designs that we've had in place before COVID to retool and redesign, rejig to build back better? There's still a lot of work to do in that. How do we actually get exponential change? Because that's what we need in order to solve the problem. We can't be just happy with normal change. It has to be exponential or in really large quantities. And then finally, this day-to-day change in behavior, which I think is very critical, is still a lot of work left to be done in our home countries, home organizations, and as individuals.
Franny, that was really, really useful. And I wanted to pick up on your last points about building back better and the need for exponential change. We have this unprecedented moment, we all realize, where the amounts of stimulus that's going to be spent in the rich world, potentially support given to countries in the developing world to build back better or to build forward together in ways that both deal with urgent challenges, but also address the Paris Agreement, the SDGs, is just so critical to get right. The next 18 months, the next 2 years, so critical to get right. And national development banks in Africa, let's hone in a little bit more on Africa and some of the more unique challenges and opportunities in Africa. And I was wondering if you could tell us a little bit more about what is the state of play when it comes to public finance, private finance in Africa. Are the African banks well positioned to help countries build back better? What kind of support do they need? So we'd love to hear, and then Rémy, I'd love to, after Franny speaks, maybe have you come in also a little bit more on this point, going deeper on the challenges in Africa.
Yeah, so Manish, I think you've hit the nail on the head with that question, because one of the potential levers to take us to this exponential change are the national development banks. And that's why I'm not surprised that the experiment that Rémy tried delivered those results, because you're bringing a large group of organizations that can really create scale change. In Africa, we have over 75 national development banks or entities, and there are more coming up. There are green banks that are being formed. We're having climate banks that are being formed. So the number is growing. But the striking feature is that 75 of them only make up 1% of the total assets that are managed by national development banks. So that means there's a large room for them to grow. The good news is African economies are growing. And therefore, the potential for these banks to grow is also very high because they benefit in general from public contributions. They have a public sector mandate. They are better aligned to the national priorities, and therefore achieving the NDCs becomes easier if you can align it to the national banks. But perhaps the three things in Africa that have impressed me in terms of the role that these banks have played. The first one has to do with the leveraging commercial and private finance. Most of the national development banks have already attracted commercial financing to the projects that they agree to finance. And you see very many of them have brought tremendous innovation in that blending between public resources and private resources. And that, I think, is a good example. And it was taken to a different scale when you see what MIGA was able to do with TDB, which is a bank that is covering 22 countries across Africa, using a MIGA guarantee to secure lending from commercial banks to TDB. And you had banks like Standard Chartered, Sumitomo, MUFG, and others coming into that mix. And that allowed TDB to make a scale change in the direction of attracting commercial resources to bring to bear for these very important investments in infrastructure and sustainability. The third area, which I think is very important, is these banks bring local currency solutions, because these large complex projects always have a local currency component. And the national development banks are very good sources for those innovations in local currency solutions. And I was even quite surprised to see how quickly some of them could go. If you take the Development Bank of Namibia, for instance, they were able to bring in ESG, environment, social, and governance considerations in all their investments. And once you do that, you get this, what we're talking about, exponential change, because they cover a wide range of investments in the country. And in order to get better at attracting and being able to see these commercial sources of finance, many of these banks have also gotten themselves credit rated. So you take the Development Bank of Rwanda, that got itself a credit rating for the first time, and now it's visible to the markets. And if you take BOAD, recently they were extremely successful in launching an oversubscribed bond, and that is then allowing them to tap into the markets to get financing for sustainability. So I think for those reasons, the African development banks, national development banks, and sub-regional development banks have really been at the forefront of innovation. And I see a lot of opportunity to bridge what Rémy raised in his earlier remarks, the public and private financing, so that the two can come together to solve the climate problem.
Yeah, that was really exciting to hear about some of those innovations around blended finance. I love the MIGA Trade and Development Bank kind of example of how to crowd in private finance, the local currency components, the ability to get credit ratings to access the capital markets. So real innovations that would enable these banks to do quite a bit more. But I was also struck by that pretty graphic number of 1%, 75 national development banks in Africa, but only 1% of what total public development banks provide. So that also, in a very stark way, points to some of the challenges around how to mobilize much more public finance. Rémy, it'd be great, just on that point, I know you've been giving a lot of thought, both AFD and IDFC and the Finance in Common Summit all have very important, emphasis on Africa. And you've been giving a little bit more thought about how to better support African national development banks. I was wondering if you wanted to chime in here with a couple of reflections.
Now, listening to Franny, I think all participants this webinar, they can measure the value of these institutions, how deeply rooted they are in their own constituency, and how useful they are in the political economy of the transition and of the fight against climate change. Just to share with you an experience I had a few weeks ago. I was in a meeting at the UN, and I was answering questions from various ambassadors. And I had the database that is on the website before me on my screen. And I was able to answer to excellencies by quoting, by mentioning institutions in their own country that are fighting for climate and SDGs, like Franny was referring to. And so it gave them a sense of reality, a sense of trust also, because we have to reassure the governments to demonstrate and provide the evidence that the transition is possible. Otherwise, I mean, you know how difficult this is for our governments to manage such a deep and complex process. And this is the case in Africa. Yes, in the database you will find 95 public development banks in Africa, but there are new institutions emerging in Ghana or in Nigeria, elsewhere, that are progressively gaining ground. Just mentioning yes, the role of Admasou Tadesse at TDB, the role of Serge Ekwe at BOAD, the leading role of my great friend Patrick Dlamini at DBSA in South Africa. Of course, all of them following the guidance and the leadership of their multilateral institution, that is the African Development Bank. Franny knows very well. So we have to support them. We will organize, and I invite all of you to a side event by May the 11th, gathering them all, as well as their financial partner, as a contribution to this summit that will take place May the 18th, about financing African economies. President Macron, with many African leaders and European leaders, maybe you remember in April 2020, they asked for debt relief. They made this op-ed in the Financial Times for that. And so 1 year after, they will gather to take stock of where the continent stands and push for solutions, both sovereign solutions, of course, but also for non-sovereign actors able to borrow and to finance the economies without relying on public, I mean, on the government's debt, which is, as you know, extremely important. And this is the way we finance our own development in Europe or elsewhere. I mean, at the moment, you need financial institutions, public, able to transform savings into long-term investments. And this is where Africa is right now. And this is the reason why you see all these institutions progressively growing and innovating. And well, I know also the debate in the US, huh? If I'm right. There's a debate raging about which institutions will implement this very large infrastructure plan that is coming these days. And there's an idea of reviving somehow the memory of what the Federal Reserve did in the 19th century, or what the Reconstruction Corporation did during the New Deal, or what is happening now at state level, to have a public institution at the federal level able to do its part, but also to leverage private finance. The same in UK, actually, with this new infrastructure green bank that is installed. So I close by saying that, yes, we have to support African institutions, local African institutions, and certainly we have to innovate. Once in a lifetime opportunity right now with the issuance of $650 million SDR, if I'm right. This liquidity has to land somewhere. And this liquidity, at least part of it, has to land in quality green investments and help hopefully structure, reinforce this architecture I was describing in my initial remark.
That was, very, very interesting. And I do think this Financing African Economies Summit on May 18th that President Macron is hosting is incredibly important, because to some extent, one of the big challenges I think in this coming year up to Glasgow is rebuilding trust and solidarity in multilateralism. There is a sense, I suspect, from many countries in the developing world that the rich world was able to mobilize $16, $17 trillion to reflate their own economies, given the pandemic and the economic lockdown. Yet the ability to provide real debt relief for the poorest countries, or to even meet the $100 billion climate finance target, seemed elusive. And that disconnect needs to be reconciled. So this is a very important year, I think, to rebuild that public trust and solidarity for support across the international community. We have several dozen questions that have come in, Franny and Rémy, in no small part from your comments already. So I want to segue immediately, if that's okay with you, to the Q&A. And I want to start with one question, Franny, that I think you're particularly, well, you can answer any of these questions, but there's one that seems somewhat basic, but is actually quite important. There was a question about how are the roles of multilateral development banks and national development banks different? How do they complement each other? And you've worn hats in each of those institutions at very senior positions for quite some time. What do you see as the role of the multilateral institutions? How do they complement what national development banks should do?
Well, thank you for that question, Manish. You may hear a bit of drilling in the background. It's not rebuilding back better, but some repairs happening next door. Very, very noisy. So I apologize if that happens while I'm speaking. That question is an important one, particularly today, as I think in the earlier remarks Rémy made, that he was missing the multilateral conversation at this leader summit. And I think it's because there is a role for different levels of engagement in order to get the intended result. So the advantage multilateral development banks have, they're playing on a global scale. They can take lessons from one area and bring them to bear in another area. So what I learned in Latin America while working at the World Bank became extremely useful when I worked in Asia and then eventually in Africa. And so that sharing of lessons on a global scale is very important role that the multilaterals play. Secondly is the public goods that are global in nature. And we're talking about climate. It's the quintessential public good that impacts basically everybody. And therefore you need the governance structures of those responsible to act to also cover the breadth of the problem. And I think for climate-related issues, multilateral solutions become very important because you have to get coordination across the whole world. And then the third one is really their ability to come in and balance out shocks that may be happening differently geographically. If you take the financial crisis, for example, it didn't impact every region in the same way, and therefore the multilateral development banks could come in and address the regional issues differently. And thirdly, it's because they also have this opportunity to mobilize very quickly the resources needed to solve a problem. If you take it, the pandemic response, for instance, the World Bank, IFC, MIGA came so quickly forward with solutions that would have been very difficult for other entities to do because of their size, their global presence, their shareholding, and so on. Now, the advantage that national development agencies bring, first, they know the problems better and therefore have a better chance to come up with unique and innovative solutions. Secondly, they're better aligned to national priorities, therefore would have the political support to move forward over multiple generations of investments. And thirdly, they are basically in the ability to switch very quickly between public and private solutions and bring those innovations to bear because of their structure and the simplicity, if you like, of some of their governance structures, which allows them to do things that would have been a nightmare for multilateral development banks. So they both have a role. and they play in complementarity. And if we use that better, we think we can get very good results.
That was, Friday, that was brilliant. Very clear around, the respective roles. And I want to pick up a little bit more on the national development banks. And a number of the questions we've received from those in the audience, there are two themes have come out in several questions. One is that there's a real unemployment challenge in many countries all around the world. As you said, national development banks have a particularly attuned understanding of the local context. So how do we think about the role of national development banks, Rémy, Franny, in terms of creating jobs that both respond to the urgent needs today, but do so in ways that also help address Paris and the SDGs? So this point about job creation, where do you see the need? How do national development banks lean into that challenge? And then there's a second theme people have asked also about what can national development banks do to help scale up adaptation programs? Mitigation programs tend to be more easily revenue generating. Some of the adaptation or resilience programs tend to be more public good in nature. How can national development banks do more to support adaptation, building resilience in the developing world? Rémy, I wonder if I could start with you.
Thanks. Yes, Franny is right. The value added of national development banks is, of course, their legitimacy in their own country, their boots on the ground, and their closeness, of course, to the various actors in their own economic system. And so there's an issue. If you think about these 450 public financial institutions as a system, how could we organize it and specialize? And how should, especially the concessional resources, flow and be positioned at the most efficient level in order to maximize, yes, job creation and the impact on the economy? And I want here to stress the importance of, I was referring to, the Green Climate Fund, because as you know, this is the only pocket of international finance that is, I would not say easily, but that is accessible for national development banks. And this is the reason why I see my colleagues within IDFC, they're all turning to the Green Climate Fund, and it gives to the fund a lot of influence, a lot of traction deep in the country. So I really dream, like Franny, of this global architecture, and it goes hand in hand, of course. The value and the importance of multilateral development banks is absolutely crucial because of, well, they are AAA because of the soundness of their business model, of the quality of their human resources and management. But I really invite all of them to consider their peers and through credit lines, through technical assistance, providing the best methodologies, leverage, mobilize all of them. Actually, the multilateral development banks, they are public banks, and they are our global connectors, our global platforms to better more fragile institutions, and yes, help remove somehow the stigma that has been for so long attached to public banks, somehow unfairly, because people are thinking that private banks are less risky than public banks, but this is wrong. This is not the way the markets are pricing these institutions, because they are public, because they have so creditful shareholders behind them. So somehow we have to revert. It's not to say that public is better than private, not at all. But in the situation we're in, we have to properly mix both capacities.
Thank you, Rémy. Franny, if you had any thoughts either on the adaptation or the job creation, there's a lot of questions. We're not going to get through all of them, but one of the questions was also the relationship between national development banks and national governments. You spoke earlier about the MDBs versus the NDBs, but in terms of the NDBs and national governments, are they fairly independent? Are they less independent? Any reflections on that relationship and what that may mean for this agenda?
Thank you, Manish. I think very quickly on the earlier question on jobs, I think the reason why national development banks become better at job creation is because of the level at which they interact in the economy. They support local companies, which tend to be small and medium enterprises, and they are the ones that generate the most jobs in any economy. But they are also the first ones to suffer when there is a shock. So if you look at the pandemic, the majority of companies that had to shed employees have been SMEs, and therefore the rebound and rebuild is also best done via SMEs. So I think that's a role that national development banks play very well. In terms of the link to national governments, that has a positive aspect that we've all been highlighting since that we started this panel, but there is also a downside, and that has to do with governance. And I think here, when you look at the work that has been done by the African Development Bank, which brings together all the African development finance institutions through an association called ADFI, the Association of African Development Finance Institutions. The three top priorities for reform under that program are first, governance reforms, to make sure that government ownership doesn't lead to government interference in credit decisions, because we know from history that's a very bad idea. And therefore you need to have that independence between credit decisions and national priorities. And I think that's one area of governance that is changing. I think I mentioned earlier the Development Bank of Rwanda, but you'll see now that they have an independent person chairing their board. And they brought in independent members from outside Rwanda to chair the board. The chair of the board is not a Rwandan, he's from the US, so they made a big change in independence so that the development bank can make the right decisions, even if they have to be aligned to national priorities. The second area is execution. Many of the national development banks have very weak capacity because they can't attract all the skills that they need, because already those skills are in high demand in the private sector and internationally. So they tend to have weak execution capacity. So a lot of them are building up that capability and partnering with others by outsourcing some of the functions so that they can continue to execute. And then the final one, which is really important, is their credit approval processes, to make sure that they are properly adapted to risk, and that when they bring in this innovation, it is actually matched to risk mitigation. And that allows them then to finance things like electric transport, bring in renewable energy and other solutions.
No, that was really helpful in trying, both recognizing there are some positive attributes being tightly associated with national governments, but there are also some potential drawbacks that one needs to really think through carefully, how to ensure good governance when you are that close to a elected government. We're running out of time. We're not going to get through nearly all the questions that we have, but I want to pick up two more very quickly, if that's okay. One of the reporters on this call was asking if either of you have very brief thoughts on the EU's recently announced sustainable finance taxonomy. Is this something that you see as relevant for how to inform what sustainable finance would be for the public development banking system? Will that be standards that you imagine could be replicated more broadly around the world? Rémy, I don't know if you wanted to take a quick crack at that.
Yes, that was an important contribution last week to the summit, and thanks to Vince for mentioning it. It's mostly designed to answer internal transformation of the European Union. But yes, it will come as a reference also for international action. Then we still are in the process of evaluating what does it mean for AFD, for instance, but also in my responsibility as the chair of the IDFC, how could we take it into account to help design methodologies that could be applicable to all the members of the IDFC, a bit like we did in 2015 for mitigation accounting. You remember that before COP21, we decided of a common methodologies between MDBs and the IDFC. So we're back into this discussion by COP26, and certainly the European taxonomy is a key element in it. A bit too early to say how far it will guide international action, both for European actors and beyond, because as you understood, the importance of the discussion today is to help all public development banks in each and every region to adopt the best methodology. And this is a way to reinforce their governance, actually, through international cooperation, and keep the very positive capacity they have to discuss with their own governments, like no other actor is able to do it, while preserving a robust and credible governance for their credit operations.
Thank you, Rémy. The hour's gone by so quickly. I'm going to ask you all just one final question, just a sentence. That's all we have time for. But as we look to the next 6 months in the run up to Glasgow, what is the one thing you think the global community really needs to deliver to help us mobilize public and private finance at scale to really help us meet the Paris Agreement and SDGs? What's the one thing we as a global community need to get right? Just one sentence or so, and then I'm going to ask Gaia to come in to help close. Franny, would you like to? Unfair question, but nonetheless.
I think if each country can commit to do better than its best in its own country, and then commit to hold hands and partner across for the rest, so better than best and hold hands for the rest, that would be my hope, because the rest of it can be details that we work out, but the intent, I think, is very important.
Love that. Better than the best and hold hands with the rest. We're going to get that out on social media, Franny. That was brilliant. Rémy.
Align. So really, we need to clarify and strengthen the mandates of all public development banks. So we are gathered now. We are there. Again, all CEOs, I verified it, of these institutions, they are willing, they are motivated by the transition. We are expecting finance ministers, leaders by COP26 to set a way stronger mandate to all public financial institutions.
Thank you, Rémy. Align. That was brilliant. Franny, Rémy, it's been an absolute privilege to be with both of you today. What a stimulating conversation. Gaia, I know we're at time, but let me turn it back to you for any final reflections. Gaia.
Great, thanks, Manish. No, that's just brilliant. Thank you, all three, for this great discussion. I just have the responsibility of wrapping up and cleaning up. So I wanted to remind you that this is recorded in case you, again, want to send it to your friends. If you want to follow the work that WRI and the Finance Center does, please go to our website, wri.org/finance, and sign up for our new newsletter. And just also feel free to reach out to us directly with any questions. And for the Financing Commons Summit, please also go to their website, which Manish mentioned earlier, financingcommon.org. And yeah, thank you so much to our panelists or our discussants here. And thank you also for everyone's participation, your questions. We're sorry we didn't get to all of them. There are several good ones still left in the queue, I know, but perhaps we can follow that up at a later date. And thank you also for all the work that you all are doing, which is, I'm sure, around the world, great and really impactful. So.
Thank you, Gaia. Rémy, Franny, once again, thank you. And just one last special thanks. I want to just mention Hayden Higgins, Caroline Lesser, Valerie Laxton, Alexis Bonnell, Magali Moranes. Indira Gandhi once said there are two types of people in the world, those who do the work and those who take the credit. Try to be in the first group. There's a lot less competition there. So I just wanted to highlight those people that actually really did roll up their sleeves to make this event happen. Thanks to all of them. Have a wonderful day.
Thanks to you all. Bye-bye. At your disposal.
Bye, everyone.